Over the last sort of few weeks or so, we've seen the Russell underperforming the S&P once again. And the last time this happened was just before December. And we all know what happened in December to U.S. stocks. What message do you think we're getting out of small and medium-sized companies in the United States? You say the economy looks pretty good at the moment. I'm just wondering what those small and medium-sized companies are signaling that we're getting this underperformance.
Well, Guy, in my opinion, when I say good, I'm talking about an economy that's running at 2% GDP. I think when you look at America and our demographics and the maturity of our markets, a 2% GDP is very, very solid and a good number. I'm not surprised that small caps are waning back and forth because I think they got overextended, then they got sold off. Small caps tend to be a momentum side of the market. But I think coming into the springtime, we're going to see some fairly decent numbers. Real estate housing is set up to do fairly well as we come into the spring. There's some interesting housing starts numbers coming up because they're still slow. Demand's going to come together. And so I think that we're set up for at least a decent springtime and a decent economy. And I think we'll see those mid-cap and small-cap companies perform okay.
You talked earlier on about the kind of the home bias that seems to be a good idea at the moment, investing in the United States. We've just seen one of the best quarters I can remember for Chinese stocks. Massive outperformance, circa 25% to the upside. Really, really incredible performances being put in. Do you think that U.S. investors are underinvested in Asia right now?
Well, it's hard to describe all U.S. investors as a group, Guy, but I know that in our case, yes, we're underinvested in China. We're overinvested. Well, I wouldn't say overinvested. We're properly invested when it comes to Japan and then Southeast Asia. But China is a particularly difficult area for a U.S. investor to figure out how to invest in, how to approach it properly. The A shares are going to be added to the major indexes. First here at the end of May and then again in the summer. So you're going to see a natural bias of global money flowing into China and into those markets to properly weight them within the indexes. We're having a long and very serious debate with our board about, if you're going to be in China, you want to be in there for a long time period. You can't trade China very effectively when you're all the way out here, in our case, in the West Coast or even in the East Coast. So if you're going to be an investor, you want to stay a long-term investor. And China's problematic. It's got, obviously, one-party system, but it's also many times going to take different views from the USA, and we have to figure out, is China going to be a friend or a foe? Remember, we're a very long-term investor. We're not going to invest just for 1 year or 2 year. We're going to invest for 30 years. So right now, we're actually, relative to a global weighting, we're a little bit underweight China, and we're going to have an active debate about whether we go to full weight as it gets added into both the FTSE and the MSCI index.